with.
Okay, we've come out of the break and we haven't got quite a break from the market fall, or maybe I should say we have got a break. At least the markets are finding their feet. 2.8 down now on the Bank Nifty. We were almost 3% down. So it's just about steadying its feet over there. And the Nifty as well, down 2%. So that 7667 previous low is just about staying in there. Probably there are buy calls at that level, we don't know. But at least the sell calls should abate to see whether 7667, the mid-August low, is holding or not for the Nifty. The mid-caps seeing fresh falls, that's 2.5%, 2.3 down for the mid-cap space. Well, we've laid down the terrain for you, and it's time we welcome two of the wizards, two of the long-term veterans of Dalal Street. Ramesh Damani, the member of BSE, such a long-term member, and Madhu, Kela, the chief investment strategist at Reliance Capital, have joined us. Good morning to both of you.
Good morning.
It's really welcome that you come at a time when nerves are frayed, when there are so many jitters in the market. People would want to hear the voice of those who have seen several such cycles of panic and survived and taught people to make money. So let me start straight away with you, Ramesh. How does this feel? Does this feel like this is the last gut-wrenching fall? Does it feel like precisely at these times of fear, the longer-term guy should stay put?
It's a very elaborate question. We don't know what it is. But I'll tell you one thing that I'm very sure about, that Benjamin Graham mentioned that. He said when all the world's smart people got together and they discussed history for the before Christ, after Christ, they finally came to one profound conclusion, that this too shall pass. Okay. And I'm very confident that even if this is a tough squall, if it's a, markets are fairly resilient, and, if you go into a market not expecting to lose money and not expecting to see a recession, I think you're in the wrong business. So these things happen. We know these things happen all the time. Having said that, I think the market is now going to focus on three main items. The first, of course, is whether the Fed will raise rates or not. That is providing a lot of the volatility in the market right now. Is China going to grow slow? The answer we know, yes, it's going to grow slow growth. And then what is its impact on India? But, my sense is once we get out of the September 17th, 18th, the Fed period, the market will start rebounding.
Okay, so this too shall pass. That's a reassuring note to kickstart the day with, considering that the market is in chaos mode. But Madhu, hi, morning. It's taken very long for the retail confidence to get back into this market. And the domestic fraternity has, in a sense, been the linchpin of this market move so far. Do you fear that the sentiment from retail could abate a little bit and we could see redemption pressure? Or is there still a lot of money that could come in?
Yeah. So first of all, good morning, and great to be here on a day like today. I think, if you talk in a very short term, a fall like this, of course, unnerves even the sentiment of very, very sophisticated investors. Forget the retail investors. Yeah. So when retail is continuously putting money, obviously this kind of a fall will put them in a back foot. But I say, Sonia, this, India's story is now well discovered. It is not that I know something which the world doesn't know. We know demographics, we know latent demand, we know 7% GDP growth rate, we know that we are the fastest country to grow. But the reality is still 97% of the population of India, and a lot of your viewers who are watching me, they have not yet participated. Their only hope is corrections like this. Because, it was so difficult to make money 3 months back, even for people like us. When the index was at 9,000, everything trading at 20, 25, 30, 40, 50, 100 PE multiple. Yeah. So, these are the actual opportunities for retail investors. And I urge people who are watching me that, if you are in your life, you have been waiting for corrections. When it is already underway, now don't shy away. Now you have to start putting money. Now, is it to say that this is the bottom today and will the market start moving up after I finish my interview? That's not what I'm saying. But if you systematically plan your investment, and if you're not invested in equity, which is the case with 97% of Indian population, then maybe this is a great time to start.
Okay, that might be a time to start SIPs.
And it's 1 minute, it's a fresh fall. It is below 7650 at this point in time. So we have breached the August lows. Bank Nifty is 3.8 down at this point in time. So that's a fresh 52-week low.
The mid-cap index is now down almost 3%, so quite a bit of fall. But good morning to both of you. Ramesh, just to extend Sonia's question, we've been to so many investor camps, and almost at every investor camps, retailers coming to us and saying that, is this a good time to buy? So far, we haven't seen any panic. Is there a risk of this fall damaging the equity cult, which we've just started to see? This year has been about a lot of domestic investments. Is there a risk of this fall, if it accentuates further, damaging that equity cult?
I mean, if it keeps falling, yes, it will. But, I don't see that happening. I think there's some great companies out here. I think once we get through this very troublesome period in September where so many economic events are lined up, China, the Fed raising rates, oil price volatility, I think you come and see, once you remove the curtains, you see great companies out here trading at much cheaper discounts than you did, inflation coming down, interest rates coming down, GDP growing, all that positive about India's story. India is actually shining in this gloom. It is a knee-jerk reaction that is forcing the market down. I think once sobriety returns, we'll probably be able to look at a magnifying glass and pick up some hidden gems, as you say, the A-list, as you say. So, there's reason to be cautious right now because the market is clearly going through unprecedented volatility. But there's no reason to think that, to answer your question, that a bear market has started.
Okay, that is something I was coming to. Is this looking like a healthy bull market correction, or are we in the middle of a cyclical bear market, if not a structural bear market?
There's nothing healthy about it. If you lose money, I never understood the word healthy correction because I lose money, you call it healthy. That doesn't work. These things happen. Here's a statistic that your viewers should know, that in 1980, when the Sensex was formulated, 79, it was 100. It's closer to 25,000 now. That's 250x move. That translates into 17% compounded long term. Dividends are tax-free. Long-term capital gains are tax-free in India. It's one of the best asset classes that you could put your money into. Yeah. And that's something retail needs to look at. You can't expect a great business to remain down forever. Yes, there will be times when it will fall down. There will be corporate misses. There will be, volatility on the street. But I think over large periods of time, we've seen the great blue chip companies in India compounding at 17%. And that's the story of, the Indian story for the last 30 years.
If I can add, Ramesh, what cult are we talking of destroying, Where is the cult?
So just 1 minute. This is just news that came in. A fire broke out in the Bandra Kurla complex building of the Reserve Bank. It was a grade 2 fire. We were just getting those pictures. You saw those pictures fleetingly. We are trying to get them live for you from BKC. I don't want to make it sound as severe in terms of destruction to life or property, but it was just some pictures that floated by, and I wanted to tell our viewers that that's what we were showing. It's a grade 2 fire. The fire is big, but at the moment we have not heard anything by way of casualties, at least. Thank God for that.
You're making the point on equity cult.
Yeah, I'm saying, where is the cult?
No, because a lot of money is domestic.
Yeah, there's nothing. What lot of money? That's why I'm trying to explain to you that from 2009 till 2014, there was a withdrawal of 1 lakh crores from the domestic investors.
Yeah, but that 1 lakh crore came back.
Nothing. It is not fully, not even recaptured.
Okay.
It's not even recouped what we lost. Okay. We have got part of what we lost. Okay, and we are talking of the absolute saving. And also the relative savings have actually doubled for each and every individual in India, including the absolute amount of money which was available, which effectively means that you saved a lot of money, you put it in bank deposit, you put it in gold, you put it in real estate, but not one single penny of that money net has come into equity markets. Okay. That is statistic number 1. Statistics number 2, even out of the saving which is there, not even 3% is invested in financial assets, in equity. What cult are we talking about? And I am saying, if there is a real crack which has happened, as Rameshji said, the markets may go down another 10%, who knows, if there is a real global rout which happens. But if history is to go by, and this is my biggest point, investors now have to differentiate, is it risky to invest or is it volatile? If it is volatile, then it's a great opportunity. Okay. And history has suggested these kind of things have only proven to be volatility. Yeah. We have been in the markets, even the best of the companies which have gone up. Take even for HDFC Bank or HDFC, which have really performed very well. You would see there is a correction of 30%, 40%, which has happened even in those companies in the last 10-year period. Right. But if investors had to lose the nerve at this point of time and say, no, is it a real risk? Which means, are we talking that the India story is completely derailed? Are we talking that all which you have learned in the last 20 years about India, was it all an eyewash? Then I can agree with you that the cult might get destroyed. But I fear that none of that is the case. I think we are still going to be one of the strongest economy in the next 5 years. Our growth rates are there. I think there is a lot of work which has happened in the last 12, 18 months, which was noticed 4 months back, but somehow it is getting unnoticed.
Madhu, I take your point about the India growth story, but you know the catalyst for every bull market fundamentally is earnings growth, and now there's talk about a global growth slowdown which could perhaps trickle down to India as well because of the Chinese devaluation of the yuan and how some of the players could become competitively disadvantaged. Would you worry about that?
No, I'm not worried because we never talked about rupee getting depreciated by 80% vis-a-vis Chinese yuan. There is so much noise which is being made for 4% devaluation of rupee.
Okay.
No, I don't think.
No. What
4%
we're
devaluation of
talking
yuan.
about is...
I am saying you took from 2008 to 2013. How much was the devaluation in Indian rupee vis-a-vis Chinese yuan? We never talked about that. We only are talking about Chinese yuan getting devalued by 4%.
No, what we're also talking about is perhaps a worry because, in spaces like, say, tires, there's been a lot of dumping of cheaper Chinese products. So that is hitting some of the manufacturers.
That's a very good point. That's a very good point. And I am sure more than you and me and more than these companies, the Indian government is worried.
Yeah.
And I am sure in due course of time, some corrective measures will happen to safeguard the Indian industry. We are already hearing, it is already in the noise that this safeguard duty will come in this sector, this safeguard duty could come in the other sector. And I am sure they will stand up to a situation wherein, healthy competition is absolutely welcome. But if someone is selling in distress and destroying the industry, I am sure government will take a note of it and corrective measures will be taken.
We have to distinguish that the Chinese devaluation is really a non-news. The only point about the Chinese devaluation was whether it would be a trend, whether China would allow it to float and then it goes to 7.
But see, Lata, already after they are devalued, they are trying to intervene every day to appreciate it. Again, they are trying every day.
No, that's why they have to put that yuan back into the system.
Beijing is not Botswana. They can't get away with a 20% depreciation because everyone will follow suit. So that leads to a war. And if that happens, then it's curtains for all global markets.
Yeah.
So I don't think that is the risk right now. China is slowing its growth. So all the exporting-oriented nations to China, Australia, Brazil, Indonesia, they're going to get hammered. Money is going to flow out of emerging markets if Fed raises rates. So that is what's playing out, not so much the yuan depreciation.
Okay. Well, so Ramesh, the next point one would look at is, therefore, should one stay with, say, the nifty companies or the stalwarts, the tried and tested? Is this a time to go at all to mid caps?
That's the place where I hunt in. So I always like those stocks. I find bargains in them even in today's market. I found bargains in them 2 years back. It's the style that he come up with. Madhu, by amount of money he manages, needs to necessarily look at the Nifty 50 companies. I'm, as an individual portfolio investor, looking more at, stocks that will become big over the next 10, 15 years or so. So,
also always striving to get there. We can't get as many as you can get it, but the aspiration is always to get there.
Just to extend that point, it's been a bottom-up market this year. A lot of stocks have made money. I mean, the Nifty and Sensex may not be reflecting that, but till about last week, a lot of BSE 500 companies were at 52-week highs and had gained 30-40%. So it's, smart stock pickers have made money. Do you expect this kind of phase to continue where the Sensex and Nifty won't give you anything, but if you get your stocks right, you'll still make a lot of money?
Absolutely. And that will be the case. I think markets in last 2 years, forget last 2 months, have been so much bipolarized. Only yesterday I made a presentation. So we can find at least in last 2 years, forget 10 years, 100, 20 years, in last 2 years there are at least 50 companies which have given more than 100% return out of BSE 500 or BSE 1000, whatever. And there are companies which have lost like 60-70% wealth if you're not being careful. And that is going to be the trend. And this is what I call, Anuj, people who have survived this bear market in India for last 5-6 years and have kept their balance sheet intact, have kept their ambitions intact, have kept their organization intact. They are the people who are actually reaping the benefit. So if you see any best performing sector also, if you can find them in pharma, that there is company which has performed exceedingly well, and there are a couple of companies which have closed down in the last 3-4 years.
Okay. Well,
similar you can find in autos, you can find in NBFC. So that is going to be the trend. I think market will continue to be bipolarized, and you will have to distinguish even within a sector. Even if you choose a sector, within that also you have to distinguish which is the one which you want to bet on.
Okay. Well, so investment styles really will be material, as well as the very fact as when to buy, how much to buy, at what stages to buy. Now, those are the things that will bedevil or that will dodge an investor's mind, that will dodge the saver's mind. We're going to answer all those questions, because coming up next, we're going to speak with our stalwarts, Ramesh Damani and Madhu Kela, on the new show that CNBC is going to stage with Ramesh Damani as the anchor, the Wizards of Dalal Street. Ramesh Damani is going to speak to us about the people whom he's interviewing in that show, their investment styles, and of course all those investment gurus are personally known to Madhu Kela as well. So investment styles in times like these is what we discuss in a minute after this break. Down now for the mid caps. It's not looking pleasant at all. 1:8 stocks. If you're looking at the advanced declines ratio, for every 8 stocks, one of them has managed to stay in the green. So it's a little eerie. 2.6% off on the bank Nifty. So it's red all over everywhere. Doubtful if there's anything at all that's green at this point in time. No. Of course, we have Cipla continuing with about a 2% gains, 1.7. And there's Wipro and Bharti for company. But otherwise, Nifty is 47 on 50 in the red. So that certainly is not looking like a pleasant picture, and I think the bank Nifty is bearing the brunt, as it were. Interest rate sensitives are also among the stocks that are doing badly, and those who have done badly are paying for their sins and continue to pay. So the entire Amtech group, again down 9% and 5%, depending on whether you're looking at Castex or Metalist. All those stocks are continuing to get marked down, marked lower and lower. People are taking money where they found it, where they made perhaps earlier. Markson's Pharma, for instance, for several months in a row, I think 6 months in a row, it kept rising. Today, 8% knocked off in one go. The realty stocks are the ones that are again seeing the pain. Indiabulls Realty, it's 8% down at this point in time, and Unitech and all, whatever there is left in the pennies, from 6 rupees it can go to 5 rupees. That's what's happening. It's quite a bit of across the board selling. People are taking money where there is, people are selling, which is already beleaguered as well.
Oh yes, and
even now on the Sensex, Lata, this is now reaching panic stage clearly as far as even the large caps are concerned. Look at some names like Tata Global Beverages, for example. That stock is down 5.5%. Bharat Forge is down about 5.5%. And these are the bluest of blue chips in terms of mid cap stocks. Apollo Tyres is down 5%. Bank of Baroda is down about 5%, much lower than the Indradhanush level. So yeah. I mean, this really is now approaching panic stage. And in fact, now we are at lower than the August lows. The August low has broken 7667, and that is all of a sudden that's led to this. The approaching of that level has led to this last bit of selling that we have seen.
You think there could be program trades which keep the previous low?
I think now there might be program buys as well, because we have approached the August lows. But the key would be whether that any kind of that buying sustains or not. This really, the next 50 points on the Nifty could come very easily in the over the next 10 or 15 minutes.
We want to check out how Asian markets are. Is this fall more savage for us? I mean, 2.5% lower is a rather huge.
For the Japanese market, in the last 10-15 minutes, there's been a sudden slide. As you can see, 400 points gone on the Nikkei, and the Nikkei has now broken that psychological 18,000 mark. So, there are a lot of indications that below that mark, there is a technical sell-off that we're seeing in the Japanese market. So it's global, actually, what we're seeing today.
Yeah, probably the combination is that people are not looking at the positive of the QE announced by Draghi as much as the fact that he has lowered the growth forecast for Europe for this year, next year and the year after. And if in this context you're going to get a little bit of tightening from the Fed, then the combination is not so positive.
Also, as we said in the morning as well, the market might well be approaching a time bottom in terms of, it might be very close. Look, you can't time it by 1 month, 3 months. It could bottom out today, it could bottom out another 1 month from here, or maybe another 2 months from here. That thing maybe all of us know. But the price damage of the last bit of bottom formation sometimes is the biggest damage in prices, which is something what we might be seeing right now.
Okay, we're certainly seeing a lot of price damage. What we don't know as yet is whether this is the final leg of panic selling that we are seeing, but there is an element of panic to this. 2% on big stocks, on the big indices, on an average on the indices. So you can imagine there are specific stocks like Bank of Baroda now down 5%. I mean, it's people are selling as if you just want to get out at any price. 170. Not 170 anymore, 167 on Bank of Baroda. Kotak Mahindra is now dropping below 600 rupees. That's a 599 rupees stock. PNB is 125 rupees stock. I mean, it's falling all over. Yes Bank is less than 650. But look at the stocks like NMDs is now double digits. 99 rupees.
Lata, you know, it was 46,000 3 weeks back. It's 39,000 and change now. So, you know, that's the kind of price damage that we've seen, even in high pedigree, high quality stocks. So look at Eicher Motors. It was 21,000 last month at some point. Now 18,000.
Has Bank Nifty broken 16,000 in that mid-August fall?
No, it did not. It did not.
Now it's reaching
this is a lower low. The Bank Nifty made a lower low even in Tuesday's trade, and since then, of course, we have seen even lower levels. So this really is now getting to the low point for Bank Nifty. I think you've turned the clock back to the pre-Modi era for the Bank Nifty. The Nifty, we are still not there, but for the Bank Nifty, I think we certainly are. And I think from the top now, Bank Nifty is corrected, 23.3%. So, I mean, this, as I said, this really is a bear market for the Bank Nifty.
Also, look at the small cap index. We're talking about the damage that we've seen in mid caps, which is down more than 2%. The small cap index is down about 2.5%, and the Nifty Junior as well has been hit very hard. So a lot of individual stocks in the broader markets. Look at Bharat Forge, it's now down 6%. Apollo Tyres is down about 6% Union Bank has corrected sharply, and all your vulnerable names like Reliance Capital, etc., are down 5 to 6%. So looking like a very ugly screen at this point. By the way, the volumes are piling up. It's not even 1 hour into trade, and we've already seen more than 50,000 crores by way of total volumes, and cash market volumes too are rising.
I think most of it is F&O volume. Yesterday, you know, we didn't see any F&O volume. Today, we are seeing a lot of F&O volume. And again, you know, just
the Bank Nifty is now at, I think, previous October levels.
Yeah.
So that's the severest fall. Bank Nifty, and you know, Bank Nifty is actually a private sector bank weighted index. If you look at the PSU Bank index, I think we should pull up a 1 year of the PSU Bank index as well. There the damage would have been even more severe. So these are the ones that are taking it down.
PSU Bank index is 35% lower than its recent peak. It's fallen 35%.
No, it's I think a 52-week low. No, not yet 52-week. I think it's in terms of 52 weeks, it still has about 10-11% to go.
No, I think it's a 52-week low for PSU, CNX PSU Bank Index. It is. I think the previous low was 29.53.
Mine says a 1 year change is still a gain of 10%.
This is a 52-week low for the CNX PSU Bank Index, and 52-week low would mean that, you know, you'll have to really draw back the clock even more to see where the last low for the CNX PSU Bank Index was. This clearly is lower than the 52-week low.
So that would be definitely pre-Modi times for PSU Bank Index.
But you think it's mostly global because ahead of the non-farm payroll data, as we were mentioning earlier in the morning, if the data is strong, there is an expectation it could be at 220,000. If it's strong, then the indications are that the Fed could perhaps hike rates, and then global risk aversion could increase.
I think even for the Dow yesterday, the intraday reversal was a bit of a problem factor, because it was telling you that maybe in the Dow also there was a bit of a fake rally that happened, and the Dow futures are now indicating 130-point downtick. And on Monday, of course, you'll have to also keep into mind that China will again come back. But you know, my sense is that it's not an easy trade even on the way down. This market can still give intraday bounces, maybe as early as today. That could happen, Lata. But you know, the best strategy would be to stay out and save your cash. Earn zero return, but at least not negative return.
Yeah, at least not killing your principal. Yeah. The rupee is still somewhat steady, 66.30. It's not seen that kind of savage selling that market cut of this nature would indicate. It started off at what, 66.15, 17, 19 thereabouts. It's just about 10 pice more expensive for the dollar. So it's not as if it's shown too much by way of losses. It's holding out still. Sensex 440 down. That's where the pain is. Let's do one thing. Since we're talking so much about China, maybe we should get a more learned voice, a more experienced voice on that country as well. It's going to start trading on Monday, but before that, markets could worry and maybe take profit. Let's listen to Stephen Roach, former chairman of Morgan Stanley Asia, and his point is that this is not a crash landing China. So some words